97% of finance departments have adopted AI in some form. But here's the problem: most accounting teams are still using the wrong tool for their workflow. The right AI accounting software doesn't do everything. It solves your biggest bottleneck first. Here's how to pick the right one. The 2026 market splits into 4 clear categories. 1. Full-stack platforms. QuickBooks with Intuit Assist and Xero with its JOX AI assistant. These handle categorization, reconciliation, and cash flow for small businesses. 2. AP and AUPT automation. Bill and Vic.ai, purpose-built for invoice-heavy operations, processing hundreds of invoices monthly. 3. AI native bookkeeping. Botkeeper for CPA firms scaling clients without hiring. And Zany for startups that want a full AI finance team. 4. Close management. Flowcast, the orchestration layer that cuts your month-end close by days, not hours. The ROI is no longer theoretical, it's documented. Firms using AI report a 30% faster month-end close and 25% more advisory revenue. A study of 277 accountants across 79 firms found AI cut the average financial close by 7.5 days. Thomson Reuters estimates AI saves 240 hours per accountant per year. That's 5 hours every single week. And Ramp's accounting agent autocodes every transaction on post, delivering a 3x faster close. These aren't projections. These are production results. Here's the framework. If you're drowning in data entry and reconciliation, QuickBooks plus Dext. If your AP team processes hundreds of invoices, Bill for mid-market, Vic.ai for enterprise. If your month-end close consistently stretches past day 10, Flowcast match the tool to the bottleneck, not the budget. But watch the hidden costs. QuickBooks and FreshBooks run promotional pricing that doubles after 3 months' budget against the regular rate. Bill charges $55 per user per month, reasonable for 3 users. But that's $550 a month for 10. Enterprise tools like Vic.ai and Flowcast require implementation engagements that can run $10,000 to $30,000 before you process a single invoice. Always request a written total cost of ownership before you sign. 2 forces make this urgent. First, the Federal Reserve's SR 26-2 guidance requires documented AI model validation for any AI used in financial decisions. If your accounting AI can't show why it coded a transaction, it's not compliant. Second, the AI CPA projects a shortage of 340,000 CPAs by 2030. AI isn't a productivity upgrade anymore. It's a staffing strategy. The tools exist. The ROI is documented. The only variable left is the decision to start. Pick the bottleneck. Match the tool. If this helped, like the video and subscribe to the AI Buzz. It really helps us grow.